Hi everyone and welcome back to Next Generation Business School, where we empower future leaders in business and finance. My name is Amin Shakulu, and on this channel we dive deep into accounting principles, tourism accounting, financial management, business strategies and economics insights. So stay tuned and let's unlock top strategies to help you excel in your studies and future career. And please don't forget to like, comment and subscribe for more valuable contents. Remember, every expert was once a beginner, and with the right knowledge and determination, definitely you can achieve greatness. Your journey to success starts here, so let's get started together. Today, we want to analyze with together's and others' case studies to practice more about the recording informations of different economic scenarios or transactions. Understanding accounting principles is very important for anyone involved in the financial management, business operation, or financial analysis. Practical exercises, in fact, like these ones that we have it with together, involving Iceland Adventure Supplies, helps solidify your theoretical knowledge by applying it into real world scenarios. And generally, there are several reasons that why these exercises are beneficial, and we emphasize to have this exercise in our course. First, the real world applications. In fact, through these practices, it allows the learners to see how accounting principles are applied in actual business transactions. So you don't have just the theoretical knowledge, you will master in real world application of your knowledge. The second reason is that you will be able to develop your skills. In fact, enhances your skills in the journey entry and financial statements analysis, and also in understand of inventory management generally take place through this practical practice with together. Accuracy in financial reporting also is other important things that will develop through these practices. In fact, teaches the importance of accurate record keeping and how discrepancy can impact financial statements take place during the practice in these lectures. Number 4 is decision making, where you provide insight about how financial information is used for making business decisions. Compliance also other reasons for our practice that helps you to understand how to comply with accounting standards and regulation. And finally, we have develop or problem solving skills during these practices that develops problem solving skills by tackling various financial scenarios and discrepancies. After explanations, the reason and the importance of these practices fit together, now we want to have an overview about the Iceland Adventure Supplies tutorials. Iceland Adventure supplies lumber yards on Adventure Iceland that engage in several key transactions throughout the years. These transactions include sales, purchases, payments, and inventory management, and the following overview will explain how these transactions are recorded in the accounting records that using perpetual inventory system and how they affect the financial statements. In fact, we have 5 different economic scenarios in different dates. We want to analyze them in the general aspects right now, and we will evaluate recording of each economic scenarios in the next step with together in details. So as you can see, the key transactions take place in 5 different dates, and the first one is April 15. In April 15, the sales of lumber in uncredit mode take place. In this scenario, Iceland Adventure Supplies sells lumber to EcoBuild's construction on credit modes, and the amount of invoice is $19,700. The cost of merchandise for this revenue also equal $10,300. The second scenario is purchase of additional lumber in uncredited modes that take place on April 19. In this scenario, the lumber you are purchase additional lumber from the Green Timber Corporations in uncredited modes, and the purchase amount is $3,700. Scenario number 3 take place on May 10, where cash payment received for credit sales. In this scenario, payment received from EcoBuild Construction for the credit sales made on April 15. Amount that received in this economic scenarios is $19,700. Next economic scenario belongs to May 19, when payment of debt to Supplier take place. In this scenario, Iceland Adventure Supplies pay Green Timber Corporation for the lumber purchase on April 19, and the amount of payment equal $3,700. And final economic scenarios belong to December 31st, where year-end inventory adjustment take place. In this scenario, physical inventory counts reveal a discrepancy between physical inventory and accounting records in the way that physical inventory cost equal $114,000, but accounting records inventory value equal $116,500. Also, the cost of goods sold equal $721,000. But what we have to do for this tutorial together? There are two tasks to complete for this tutorial. First, prepare accurate journal entries for the various transactions and adjust inventory records to reflect physical counts. Also, calculate the gross profit for the years and understand the impact of this transaction on financial health of the business. So, through these two general tasks, by the end of these tutorials, you will be able to well versed in handling real-world accounting scenarios and ensuring that financial records are both accurate and insightful, and capable of making informed business decisions based on these records. So let's dive into details and solve this transaction step by step together. Start from first transaction from April 15. On April 15, Iceland Adventure Supplies sold lumber on credit to EcoBuild Constructions. The total amount invoiced for the building materials was $19,700, and according to inventory records, the cost of this merchandise was $10,300. This transaction involves recognizing revenue from the sales and recording the cost of goods sold along with the reduction in inventory. And as you can see, in April 15, what took place? Selling something, because Iceland Adventure Supplies sold lumber on credit modes. So when the selling takes place, we need to record it in two levels, because we are accounting in the merchandising company under the perpetual inventory systems. So this is our level 1 and this is our level 2 of recording. The level 1 of recording is belong to recording the sales and accounts receivables, and in level 2 we record the cost of goods sold and reducing the inventory. In fact, we need to record the cost of the revenue in level 1. So let's look with together what happened in level 1. First, we need to choose two accounts with together. The first account is accounts receivables, and the second account is sales. The accounts receivable is increased because Iceland Adventure Supplies expect to receive $19,700 from the EcoBuild Constructions in the future. And it's recorded as a debits because we expect that we will receive $19,700 from the eco build construction in futures and they buy on credit mode, we should choose account receivable, and account receivable is increase. Account receivable belongs to assets, and increase in assets accounts considered as a debits. The next account is sales or sales revenue. These accounts also increase because the company has earned 19,700. Naturally, we earned 19,700. We earned 19,700. So earning of 19,700 is lead to increase in the sales revenue. Sales and revenue increase always consider as credits, unlike to cost that we will have in the level 2. On level 2, our first account is cost of goods sold. This account increases because the company has incurred the cost of $10,300 for making this revenue, or cost is 10,300 to make this revenue. So the cost of goods sold increase. Unlike the sales, don't worry, these two not like each others. So they behave differently. So increase in the cost of goods sold consider as debits. And the next account is inventory. This account decrease because we take the amount of inventory and sell it to the final customers. When we take from the inventory, naturally the inventory is decrease. Inventory is belong to assets. Decrease in assets considered as a credit. So the same amount in double accounting roles is increase for inventory, and increase in inventory is considered as credit by $10,300. These journal entries ensure that both the income earned and the expenses incurred are accurately reflected in the company's financial records. And accurate record keeping is essential for maintaining a clear financial pictures and making informed decisions in business. Next, economic scenarios or transactions that take place on April 19. On April 19, Iceland Adventure Supplies purchases additional lumbers on credit from Green Timber Corporations for $3,700. As you can see, this transaction involves increasing in the inventory to reflect the new lumber purchases and also recognizing the liability for suppliers. Why? Because we buy something. The company purchased something in on credit mode. So we purchase something in on credit mode. One account that should be chosen is inventory. The amount of inventory is increased because we buy something, we purchase something, put it in our inventory, so amount of inventory is increased. Because the inventory belongs to the assets, increase in inventory considered as a debit by $3,700. Next account is accounts payable. This account increased also because the company owes $3,700 to Green Timber Corporations. And for this purchase, we need to increase account payables by the same amount. So account payable is increased by same amount. Accounts payable is belong to the liability of company. Increase in accounts of liability considers as debit in accounting. So inventory increased by $3,700. Accounts payable increased by $3,700. Both increased, but inventory increase considered as debits. Accounts payable considered as credit. This journal entry ensures that both increase in inventory and corresponding accounts, corresponding liability accounts, account payables, are accurately reflected in the business financial records. And accurate record keeping is essential for maintaining a clear financial pictures and managing the company's obligation effectively. Okay, because we want to more efficient, we consider two events in this part of the lectures. Events 1 belong to the May 10, events 2 belong to the May 19. Let's start from events 1, May 10. That's payment received for the credit sales. On May 10, Iceland Adventure Supplies receive a cash payment of $19,700 from the EcoBuild Construction for the credit sales that was previously invoiced on April 15. In fact, we need to record the receipt of cash and reduction in account receivables. So we receive the cash. The cash is increased. Cash belongs to the assets. Increase in assets accounts considered to debit by $19,700. The corresponding account is account receivable that simultaneously experience decrease. This amount decreased because the company no longer expect to receive the amounts from the EcoBuild constructions and it's recorded as a credit. These two accounts belong to the assets. Increase in assets accounts take place for cash, so it's become debit by $19,700, and the same amount is decreased from accounts receivable because we expect that there is no additional payments for this debt take place, so decrease in accounts payable considered as a credit. For event 2 that take place on May 19, payment to settle debt take place. As you can see on May 19, Iceland Adventure Supplies settle the $3,700 debt out to Green Timber Corporation for purchased lumbers. So first we need to choose two accounts. First, accounts payables. This account decrease. Why? Because the company has paid off its debts. We paid off our debts. So the amount of debts through the account payable is decrease. Decrease of debt or liability considered as debit by $3,700. We take the money from our cash and pay for our debt. So corresponding accounts is cash that experience the decrease. Decrease in cash considered as credit because cash belong to assets. Decrease in assets account considered as credit by same amount. On summary, on May 19, Iceland Adventure Supplies recorded the payment of $3,700 to Green Timber Corporations that settle the amount out for the lumber purchase on credits by debiting accounts payables and crediting cash. The company accurately reflected the decrease in its liability and cash balance. This ensures that the financial records show the correct amounts for liability and cash and maintaining an accurate financial picture. Let's look together to December 31st, the final economic scenarios. And the subject for these economic scenarios is inventory adjustment based on physical counts. As you can see, on December 31st, Iceland Adventure Supplies conduct a physical count of its inventory and determined the cost of the inventory on hand was $114,000. However, the accounting records showed an inventory value of $116,500. This discrepancy indicates that inventory shrinkage takes place, and this shrinkage equal $2,500. So the physical inventory counts was verified by the company auditors and considered accurate. So there is a shrinkage take place between the cost of inventory that take place by physical count and what the accounting document shows. 116,500, this is what accounting document shows, minus what the physical counting shows, $114,000. The difference equal $2,500. In fact, the $2,500 shows that we have shrinkage in the total amount of the inventories. But we should shows in the accounting documents and records this $2,500. This $2,500, the difference between these two amounts should be recorded in the accounting documents in the standard true way. For this way, look like the other economic events, we need to choose through two accounts. First is accounts of goods sold, cost of goods sold. This account increase because inventory shrinkage is treated as an expense. We consider and identify this 2,500 as an expense, and this expense recorded under the cost of goods sold account in the merchandising companies. So the cost of goods sold is increased and reflecting the loss in inventory. An increase in cost and expense considered as a debit. The simultaneous corresponding accounts for this case is inventory. This account is decreased to reflect the actual inventory on hand after the physical counts. So this account is decreased by $2,500. As you can see, is decreased. In fact, this decrease in inventory is showing the same operation that we are reviewing together. So cost of goods increased by $2,500. Debits inventory decreases by same amount, $2,500. Credit for the event that take place on December 31st. Okay, part B. The objective of part B is preparing a partial income statements. For Iceland Adventure Supplies, we want to prepare a partial income statements to show the company's gross profit for the year ended December 31st. And the net sales for the years is $1,422,000. $1,422,000 is the net sales, and we consider the net sales as a first item of partial income statements of Big Oak Lumbers for the year ended to December 31st of 2023. The net sales equal 1,422,000 minus the cost of goods sold. The cost of goods sold represent the direct costs attributes to the production of the goods by the company. In fact, the cost of goods shows the direct cost that needed to expend for the productions of goods or services. This cost of goods sold, includes the beginning inventory, purchases and adjustment for the inventory shrinkage or discrepancy. For the find of cost of goods sold, we need to take these operations. And this is the beginning inventory plus purchases, that in this case we don't have purchases during the years. And after that, we need to add it to shrinkage adjustment by $2,500. So $724,000 plus $2,500 equal $723,500, the amount of cost of goods sold. And we need to find the difference between net sales and cost of goods sold to find what is the amount of gross profit. In fact, the gross profit is the difference between net sales and adjusted cost of goods sold, and it represents the profit made by the selling goods before deducting the operation expenses, taxes, and other costs. So, because this is before deducting the operation expenses, taxes, and other costs, we named it as a gross profit. So, what is the importance of accurate financial records for this case? The accurate recording of these transactions ensure that the financial health of the company properly reflected. Inventory management also understanding and maintaining the accurate inventory counts are crucial for effective financial management. And finally, profitability analysis. Calculating a gross profit as we did in this part of the lectures helps in evaluating the company's profitability and operation efficiency. By preparing these partial income statements, Iceland Adventure Supplies can clearly see the impact of their sales and cost of goods sold on their gross profits, and this provides a foundation for assessing the company's financial performance and making informed decision for future operation. Thank you for your precious attention.